Imagine putting $100,000 into dividend-paying investments and letting that money work for you every single day. Sounds simple, right? But the real question is, what does $100,000 actually pay in dividends in the real world? Not the fantasy numbers you see on social media, not the hype, not the get-rich-quick talk. Today, we're breaking down exactly how much money $100,000 invested realistically pays in dividends, what income ranges you can expect, the factors that change everything, and how long it may take to turn dividend income into real financial freedom. Welcome back to Stock Predictor. If you're serious about building wealth and want real, practical, numbers-backed breakdowns, make sure you stick through to the end, because I'll reveal the actual dividend income scenarios from conservative to aggressive, and the one strategy that most investors ignore but makes the biggest difference. Let's start with the truth. Dividend income is not magic. It's math plus patience. And if you understand the math, you can predict your dividend income almost down to the dollar. So first, let's talk about the number everyone wants to know. What does $100,000 invested actually pay? To understand that, you need to understand dividend yield. Dividend yield is simply the annual dividend payment divided by the price of the stock or fund. So if something pays a 3% yield, that means you're earning 3% of your invested money every year, paid out in cash. Now here's where people get confused online. Some say $100,000 can pay $1,000 a month. Others say it pays nothing. Others say you can live off it forever. None of those answers are correct without context. So let's break it down using real numbers based on real yields available right now. Let's start with the conservative scenario, a 2% yield. This is typical of large, stable companies like Apple, Visa, or many broad market index funds. At 2%, $100,000 pays $2,000 per year. That's just $166 per month. It's steady, safe, predictable, but it's obviously not life-changing. Now let's move to a moderate yield, around 3 to 3.5%. This is where many blue-chip dividend stocks live, such as Coca-Cola, Procter & Gamble, Johnson & Johnson, McDonald's, and strong dividend ETFs like SCHD or VIG. At 3%, $100,000 pays $3,000 a year. That's $250 per month. At 3.5%, you're looking at $3,500 a year, or around $291 per month. Not huge, but you can already see the income growing. Next is what most realistic dividend investors target, the 4% to 5% range. This is considered balanced, higher income without taking excessive risk. Examples include utilities, REITs, energy infrastructure companies, and higher yield ETFs like HDV, some REIT ETFs, or covered call ETFs. At 4%, $100,000 pays $4,000 a year, $333 per month. At 5%, $100,000 pays $5,000 a year, $416 per month. This is where many investors start to feel the income in a meaningful way. But what if you go higher? What about 6%, 7%, even 8% yields? They exist, but higher yields almost always mean higher risk. You see high yields in certain REITs, BDCs, covered call funds, and some energy companies. The danger is that high yields often come from stock prices dropping or dividends being unstable. But if you choose carefully and diversify, you can still make it work. At a 6% yield, $100,000 pays $6,000 per year, $500 per month. At a 7% yield, that's $7,000 per year, $583 per month. At 8%, you're getting $8,000 per year, $666 per month. Now this sounds exciting, but again, it comes with more volatility, more dividend cuts, and more homework. Now here's the top of the food chain, the extremely high yield range, 9% to 12%. You will see these yields posted everywhere online, especially in income-focused funds like QYLD, RYLD, XYLD, JEPI, JEPQ, some mortgage REITs, and some BDCs. But these funds often sacrifice long-term growth for high current income. So while the yield looks amazing, your total return might be lower in the long run. Still, for educational purposes, let's calculate it. At 10%, $100,000 pays $10,000 per year, that's $833 per month. It sounds crazy, but this income is often less stable and may fluctuate. So with all that said, the real question remains, what can you realistically expect from $100,000 invested today? For most investors who want a balance of income, safety, and growth, the realistic number is around 3% to 5%. That means your real expectation should be somewhere between $3,000 and $5,000 per year, or $250 to $416 per month. It's enough to cover a phone bill, groceries, utilities, or maybe even your car payment, but not enough to retire on by itself. But here's where things get interesting. Dividend income isn't just about what you earn today. It's about what your income turns into in the future. And this is where dividend growth becomes incredibly powerful. Imagine you invest $100,000 into companies that grow their dividends by 6% to 10% per year. Companies like Microsoft, Costco, Lowe's, Visa, Home Depot, and many others increase their dividends every single year. So what starts as $3,000 in annual income can quickly turn into $6,000, then $10,000, then more, without you investing another dollar. That's why many experienced investors focus not only on yield today but on dividend growth tomorrow. A dividend that grows consistently can double your income in less than a decade. Now let's talk about the biggest mistake people make, chasing high yield without considering total return. Think of it like this: would you rather have an 8% yield that never grows and loses value? Or a 3% yield that grows every year and doubles your income over time? The smart investor knows that dividend investing is a long game. The more stable the company, the more predictable your income becomes. So now that we've covered different yield ranges, let's combine that with realistic portfolio choices and look at what actual sample portfolios might pay. Scenario 1. A conservative blue-chip dividend portfolio. This includes companies like P&G, Coca-Cola, PepsiCo, Johnson & Johnson, and dividend ETFs like VIG or SCHD. A portfolio like this pays around 2.5% to 3%. So $100,000 invested here realistically pays $2,500 to $3,000 per year. But the dividend growth rate is strong, around 6% to 10% per year. That means your income will double faster than you think. Scenario 2. A balanced dividend portfolio. Mix in some utilities, telecom companies, REITs, and ETFs like SCHD, HDV, and a few carefully chosen higher yield positions. Yield is around 4% to 5%, so $100,000 pays $4,000 to $5,000 a year. This is the sweet spot for many investors who want solid yield without excessive risk. Scenario 3. A high-yield income portfolio. This includes covered call ETFs like JEPI and JEPQ, certain REITs, some BDCs, and high-yield energy infrastructure companies. Expect around 6% to 8%, with some fluctuation. So $100,000 could pay $6,000 to $8,000 a year. Income is higher, but growth may be slower, and dividends may not always be stable. Scenario 4. An aggressive yield-chasing portfolio. This includes double-digit yield positions like mortgage REITs, leveraged funds, or extremely high-yield ETFs. You might see yields between 9% and 12%, so $100,000 might pay $9,000 to $12,000 per year. But this is high-risk income. You may lose principal value, see dividend cuts, or face extreme volatility. But the real question is this: which scenario is right for you? The average investor who wants consistent income with strong long-term growth should aim for the balanced middle category, around 4% to 5% yield. This gives you meaningful cash flow today plus safer appreciation tomorrow. Now let's talk about the part most people ignore: taxes. Dividend taxes can make a big difference depending on your country, your tax bracket, and whether your dividends are qualified or non-qualified. Qualified dividends in the US can be taxed at 0%, 15%, or 20%. But some high-yield funds pay non-qualified dividends, which means they are taxed as ordinary income. So before you chase yield, understand how taxes affect your real earnings. Now let's talk about dividend reinvestment. If you take your dividend income and reinvest it, meaning you buy more shares automatically, your income doesn't just grow, it compounds. This is the secret behind exponential dividend growth. A portfolio paying you $4,000 per year today could grow into $8,000, then $12,000, then $20,000 without you needing to add more money. So the real secret behind dividend income isn't the yield, it's the compounding plus dividend growth. But what if your goal is to live off dividends? Can you live off $100,000 invested? The short answer is no, not by itself. But here's the longer answer: dividend income scales fast when you consistently add money. If you invest $10,000 per year at a 4% yield, that's $400 more income every year just from the new contributions. Combine that with dividend growth and reinvestment, and you can build a huge income stream over 10 to 20 years. Here's a powerful way to think about dividend investing: you're building a machine that pays you monthly, quarterly, and yearly, forever. The more you feed the machine, the more it pays. It's not a get-rich-quick plan. It's a get-rich-for-sure plan if you stick with it long enough. So now let's answer the question one more time, simply and realistically. If you invest $100,000 into dividend-paying assets today, you can realistically expect around $250 to $416 per month in income. Some will earn more, some will earn less, but this is the real, mathematically accurate range for most investors. Before we wrap up, here's the part that separates successful dividend investors from everyone else: consistency. Consistent investing, consistent reinvesting, consistent patience. The dividends you earn in year 1 will look tiny. But the dividends you earn in year 10, year 15, year 20, that's where the magic happens. So whether you're earning $2,000, $5,000, or $10,000 a year on your investments, remember, your dividend income is a reflection of your long-term discipline, not just your investment choices. What you build today becomes your passive income tomorrow. If you found this breakdown helpful, make sure you like the video, subscribe to Stock Predictor, and drop a comment telling me what yield you're aiming for on your first $100,000. And if you want the next video to break down what $500,000 or even $1 million pays in dividends, let me know down below. Thanks for watching, and keep building your future, one dividend at a time.